Hello everyone, welcome to Officer Sutta 24/7. My name is Soumya Prakash. As you all know that we have started this series Champions where we are discussing unit-wise module of all the subjects that you have to study for your JAIIB exams. So today I am taking up another unit which is unit 23 of module B, Appraisal and Assessment of Credit Facilities. So before I start, please share the link of this video with all your friends and colleagues on WhatsApp, Facebook or Telegram group so that they also come to know that we are doing this series and they can also benefit from this series. They'll get to know a little bit about what is in the unit and what kind of questions they can expect in the JIIB exams. So let's begin today's topic. So as you all know that credit is one of the most important thing which we have to do. The main business of banking is about taking deposit and doing loans. Although we have shifted to other services as well, but credit itself is a major part of the business which the bank is doing. So what happens in credit is that you're giving loan to the customer. Since we are taking deposit from the customers and we are giving loans to our borrowers, it is very important that whatever we have given as loan to a customer, it should be repaid back. So credit is a loan or a debt of whatever form sanctioned by bank to its customer. So credit is a loan or a debt of whatever form sanctioned by a bank to its customer. So if we are taking deposit from A, we are giving that to B, and we have to ensure that this loan which we are giving to B, it should be repaid back to the bank. It is not going directly from A to B. A is depositing money in the bank and bank is giving loan to B. So credit is loan, basically all kind of loan. We term it as credit. The word appraisal is synonymous with assessment, evaluation, judgment, review, and consideration. So assessment will be done on B because we are giving loan to B. We will see that whether the customer is credit worthy or not. Does B has capacity to repay the loan or not? The purpose for which B is taking loan, is it as per the bank policy or not? So there will be a lot of things that you have to consider before giving loan to any borrower. So assessment, evaluation, judgment, review, and consideration are part of it. The process revolves around character, collateral. Character means character of person B. Collateral is what security the bank is going to take for giving that particular loan. Capability and capacity. The customer B should also be capable and they should have capacity. There should be some earning of B through which they can repay the loan. So there are various credit appraisal technique. Credit appraisal process involves the following steps. First of all is borrower identification and verification. We take the KYC documents of the borrower and we see whether the identity and address or whatever they have given about their occupation, that is correct or not, whether they are actually, if the customer has come to us and they told us that they are doing business, we have to ensure that they are doing business and they are generating profit out of it. If they are doing any kind of service, we have to ensure that they are doing any kind of service and they are earning salary for it. So we have to do the basic identification and verification work. Then we have this assessing the business of the borrower. We will also see that if the person is saying that he is doing business, or if we are granting loan for any kind of business, we have to see that whether that business is generating enough income to repay the loan or not. So assessment of the business of the borrower will also be important. Then comes understanding the credit requirement. What is the requirement of the customer? What do they want? How much they want? It is not that we will not see what the credit requirement is and we will give as per our uh, what is being given in the, like in most of the loan products we have the maximum limit, the maximum amount which you can give in a particular loan. But we will have to see what is the credit requirement of the customer, what they want. They want only maybe maximum we can give 25 crore, but the customer require only 1 crore loan. So we'll be giving the customer only 1 crore in loan. Due diligence report, we will have to do due diligence also on the customer as well as the activity in which they are engaged. They should not be doing any activity which becomes detrimental for the cause which we are giving loan to the customer. Selecting appropriate exposure or scheme. So as per the requirement of the customer, we will see that how much exposure we can take in, especially in large projects, not in smaller projects or retail customers, but in large projects we have to see that we are not crossing the exposure limit which the bank has assigned for a particular loan segment or a particular industry or particular sector or a particular company or a particular group. So depending upon the exposure norms of the bank, we will have to see, and we will also be selecting the right scheme for that particular customer as per the requirement of customer. Final, then it would be we'll have to finalize what would be the terms and condition, in how many months the customer will repay the loan, what interest we will charge to the customers. As you must have seen that nowadays what happens is, even in the same loan, rate of interest differs based on the CIBIL score of the customer. So all those customers who have better credit score, we will be charging less from them, and all those customers whose credit score is not very good, we usually charge more interest from, rate of interest would be higher for them. So this is the criteria of the bank nowadays. And so now comes validation of proposal. What validation means is we have to verify everything what has been given by the, whatever information has been given by the customer, we have to verify all the informations. So information provided by the applicant is verified with supporting documents where possible. Like if they are informing us that they are salaried, then we will need Form 16 from that particular employer. They would be filing their ITR, income tax return. We will need a copy of that. If the customer is saying that he's a business person, we will require the registration document. We will also see if they have any GST, VAT registration. We will also ask them for their balance sheet, their ITR, and we will verify those documents. Another important modality is field verification. Field verification is again very important for all the bankers, that not just the documents. We don't believe on the documents. We also verify those details by going to the field. Going to the field means going to the place of residence or office and getting it verified from there. So the banker will visit office and residence. This will be considered as field verification, or whatever, for whatever purpose we are giving loan, we will verify that also. If we are giving a loan, suppose for a factory, we will go and check that factory or any plant and machinery. Or if we are giving for stocks, then we will go and see that what kind of business they are doing, how the business is running. So this will be also be the part of bank lending process. Next comes important part of validation is verifying all the required approvals and licenses both on record and on display at the premises. So whatever approval they have taken, if they are manufacturing something, then we have to go and check that whether they have the requisite approvals from the concerned department or not. We will check those details also. We will check the licenses. We will check it if they can produce it in the bank, then well and good. Otherwise, if we have to go to their premises to check those details, we will do that. Next, another hygiene factor is the applicant's capacity to borrow. We will see what kind of or how much the income is being generated. So here we will be checking the income generation of the unit, or if the person or the borrower is earning any salary, then whether the applicant has the capacity to borrow or not, whether he will be able to justify the EMI or not through their income. Now, what is credit risk? Credit risk is defined as the possibility of borrower or counterparty default. It simply means A has given loan to B, any kind of loan. This could be any personal loan, but B is not repaying to A. This is known as credit risk because banks are in the business of giving loans. They are more exposed to this credit risk. Credit risk rating, in all the loans we have to do credit risk rating, and credit rating is one of the credit appraisal tool. Credit risk rating model assigns grades or marks to known risk components. So based on various parameters and also based on which loan the customer is asking for, whether this is P segment loan, that is personal segment loan, it is a business loan. Based on that, there are various risk rating models in all the banks. We do some of the internal ratings as well as we have to obtain external rating in some of the cases. If there is a limit defined after which you have to obtain external credit rating also. For internal rating, we have different models which are assigned for different kind of loan, whether the loan is personal segment, business or agriculture, or even in the personal segment, there may be different parameters for different products. It again depends on bank to bank. Criteria for decision, criteria rating score of applicant if the purpose of loan fits in with credit policy of the bank. So whatever the purpose of the loan is, it should be aligned with the credit policy of the bank, and loan will breach any of concentration limit prescribed by the bank. As I was telling you about the exposure limits which the bank policy has for various customers, for group of customers or for any kind of um particular industry sectors, bank will, before lending, you have to check these details also. Now there are 7 aspects of appraisal. Credit worthiness, we will see whether the customer is credit worthy or not. Character, character will be, we will, during our field visit, we will get to know about the character of the customer. Capacity, whether they are earning income or not, either it could be either from any kind of business or it could be from salary. Capital, do they have enough capital or not? Collateral is the security which the banks take. So collateral will be the security. Conditions, on what conditions we are going to give the loan to the customer, and there should be cash flow. Cash flow could be anything from income, from business, or any kind of employment. Now comes working capital. What is a working capital? So capital required for a business enterprise can be classified as two main categories. Working capital are simply the capital which a company requires, which a firm requires. I would not say company, company would be a much bigger term. So any firm, whatever they require for their daily use will be termed as working capital. When they are investing in plant and machinery or land and factories, these will be termed as fixed capital. Working capital is what they required for their daily operations. It could be for purchasing raw materials, it could be for purchasing um, any equipment, not equipment, spares and parts. It could be for paying wages of the employees. So this will be part of the working capital. So there is fixed capital and working capital. Fixed capital, as I told you, fixed capital are those which are for long term, like land, property, factory, or any plant and machinery. So they will form the part of fixed capital. Working capital will be required for their operational work. Assessment for work Assessment of working capital requirement, there are few methods. One is turnover method, operating cycle method, maximum permissible bank finance method, cash budget method. So in turnover method, we will see what is the turnover, that is the revenue which is being generated by the company. So based on the revenue generation, we will decide on how much can be given as loan. Operating cycle method, we will see what is the operating cycle time period of the customer or of the firm. So based on the operating cycle period, we will be providing loan to the customer. So it will depend on the operating cycle, and based on that we will find out what is the requirement of the firm. Maximum permissible bank finance, it has three methods. There are three methods given for maximum permissible bank finance, and last one is cash budget method. Cash budget method are used for giving loans when you have to provide any kind of ad hoc facilities, or it could be LCBG, where you will uh, take a budget from the customer, and whatever is the budget for 3 months and whatever is the minimum which is required by the customer within 3 months, that will be given as loan to the customer. So let's do some questions. Dash is defined as the possibility of borrower counterparty default. A dash model assigns grades marked to known risk. In Dash model assigns grades marks to known risk components. Investment in land, plant, machinery, building, furniture, etc. assets represent that part of firm's capital which is blocked or on permanent basis is called dash capital. Dash is the capital invested in total current assets of the enterprise. Interest rate risk, risk rating, working capital, gross working capital. Credit risk rating, working capital, gross working capital. Credit risk rating, fixed capital, gross working capital, or credit risk rating, fixed capital, net working capital. You have to fill in the blanks and then you have to choose the correct option. And the units of module A and module B, they are very voluminous. It is not possible to cover the whole unit in one session. It usually takes little longer, and for that you can start your preparation right now, because you will have March closing as well and statutory audit after the March closing. So what is going to be the answer of this question? Dash is defined as the possibility of borrower or counterparty default. A dash model assigns grades marks to known risk components. Investment in land, plant, machinery, building, furniture, etc. asset represent the part of the firm's capital which is blocked on permanent basis and is called dash capital. Dash is the capital invested in total current asset of the enterprise. Interest rate risk, credit risk rating, working capital, gross working capital, credit risk rating, working capital, gross working capital, credit risk rating, working capital, gross working capital, credit risk rating, fixed capital, net working capital. So let's start with this. So that dash is defined as possibility of borrower or counterparty default. This is known as credit risk. Second comes a dash model assigns grades marks to known risk components. So this is credit risk rating. As in the unit we have seen, this is the rating model which assigns grade and marks to known risk components. Investment in land, plant and machinery, building, etc. will be known as fixed capital. And dash is the capital investment in total current asset of the enterprise that is known as gross working capital. So this is gross working capital, and so the right answer is C. Messrs. ABC is a manufacturer of molded plastic household goods like buckets, mugs, etc. Annual turnover for 21-22 was 80 lakh and it was targeted 25% growth in 22-23. How much will the bank finance to the customer? 25 lakhs, 20 lakhs, 5 lakhs or 15 lakhs. So this is as per the turnover method. Measures ABC is a manufacturer of molded plastic household goods like bucket, mugs, etc. The annual turnover for financial year 21-22 was 80 lakh and it has targeted 25% growth in financial year 22-23. How much will the bank finance to the customer? 25 lakhs, 20 lakhs, 5 lakhs or 15 lakhs? So this will be part of turnover method. What happens in turnover method? The actual in financial year 21-22 it was 80 lakhs. In 22-23 it is expected to rise by 25%. So 80 lakhs plus 25% of 80 lakh, it will become 100 lakh. So their working capital requirement will be 25% of this, 25% of 100 lakh, which will become 25 lakh, and bank will finance 80% of their working capital requirement, that is 80% of 25 lakh, which will come out to be 20 lakh. So right answer will be 20 lakh in this particular case. Next is which of the following is or are not correct in respect to the formats taken for credit monitoring arrangement. Form 1 particular of existing limit from banking system financial institutions. Form 2 fund flow statement. Form 3 analysis of balance sheet part A balance sheet spread analytical and comparative ratios. Form 4 comparative statement of current asset liabilities. All are correct except 2, all are correct except 3, all are correct except 4. Right answer is all are correct except 2. B is the right answer for this question. A dash is a written but unconditional undertaking given by the issuing bank on behalf of its customer to the beneficiary that it will pay him the amount stated in the credit provided document and presented in strict conformity with the terms and conditions of the credit, bill discounting, bank credit, letter of credit, or term loan. A dash is a written but unconditional undertaking given to the issuing bank on behalf of its customer to the beneficiary that it will pay him the amount stated in the credit provided document and presented in strict conformity with the terms and conditions of the credit, bill discounting, bank guarantee, letter of credit, or term loan. Will be at in this particular unit we are going to study different kind of credit facilities also that the bank is providing to its customers. So in this case the right answer is letter of credit. In which of the following demand bills drawn by the borrower on the buyer are purchased by the bank and the amount of the bill less bank charges is paid to the borrower? Bill discounting, bill purchase, advance against bills for collection, drawee bill acceptance. In which of the following demand bills drawn by the borrower on the buyer are purchased by the bank and the amount of the bill less bank charges is paid to the customer? Bill discounting, bill purchase, advance against bills for collection, drawee bill acceptance. Right answer will be bill purchase. So this is it for today's session, and we are launching today. Our new batch is starting from 8th of January. So for enrolling for our new batch, because then if you're starting with the new batch you will get to study everything from the starting, and this is the right time that you should start your preparation because it will help you to build the concept and also revise and practice. So for enrolling for our batches, you can go to Adda 24/7 site. If you have not downloaded the app, then download the app through Google Play or Apple Store. Then you have to go to all courses, JIB, CIB, JIB May 2025. Here we have this winners batch which is starting from 8th of January. Vijita in Hindi. So in both the languages batches are available. There are also subscription for different subjects. If any of your subjects is not been clear, you can enroll for that. For winners batch, you have to click on this link, go to buy now, and here you will use the code Y984 and it is not being populated. So you can use this code to get the maximum discount. And with that, thanks a lot. Subscribe to the channel and click the like button. Also, subscribe the channel because you'll be getting a lot of information about JIB, CIB as well as promotion exams on this particular channel. So with that, thanks a lot and wishing you